We have pro trader Jon Najarian with us now for the final trade of the day. Good to see you, Dr. J.
Great to be here with you, Angie. Thank you.
As a professional player, what's your plan of attack when trading the banks?
There are really two huge drivers for the banks. One is interest rates. Obviously, when they go up, that's better for the banks because they're able to make more spread on our money. So there's nothing better than that. The second best thing is if people are looking for loans from the bank. In other words, if loan activity has picked up. And at least so far, loan activity has been fairly muted. It hasn't been exploding higher. And the interest rates certainly haven't exploded higher, absent that 2 or 3 month period in 2018. So banks really haven't had a great year and a half. And believe it or not, I'm not looking for that to improve dramatically anytime soon.
Do you have favorite stocks from the banking sector?
Love Citi, love JP Morgan. Both of them have huge credit card divisions. And that's one of the easiest ways to lend money are through credit cards and so forth. Because, of course, Visa and MasterCard, they're just processors. They don't lend anything. But ultimately, the credit card companies, the issuer, JP Morgan Chase, JPM, and Citigroup, symbol C, they can make some money on that. Of course, so does American Express, but I'd prefer Citi or JP Morgan, Angie.
Do you think deregulation is making a big difference for the banks?
I don't know if deregulation has helped them beyond the initial pop that they had years ago when that deregulation hit. Now, as we saw with SunTrust and BB&T getting together, or at least trying to get together, I think banks realize that it's an awfully expensive proposition. You got to get big or you got to go home. And I think of the regional banks, that's one of the issues is they have to spend so much on security, Angie, and other things that to compete with, the Citis, the JP Morgan Chases, the Bank Americas. I think for them to do that, they've got to get together and create more size, more synergy within a bigger group of investors.
There's been some talk of recession. How does that play into your strategy?
When consumers get a sniff of that, they pull back generally rather than extending and going whole hog. I think consumers pull back if they think there may be a recession. So I think they get a little worried when they hear recession talk, and that cuts loan activity down. Also, when rates popped, as they have with mortgage rates, for instance, they've pulled back a little now, and I think they need to pull back further for the mortgage business to really regenerate and really get back on track. I think right now there's the reason we're seeing home starts as well as mortgage applications down double digits in both cases is because people are afraid that rates are either higher than they actually are or they're a little too high and they just can't justify reaching for them.
Thank you, Dr. J. We always appreciate having you on our show.
Thank you, Angie.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.